The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, my little alert just went off to tell us that silver had just made a 61% retracement at 16.37 per ounce. It only went off once or twice, so there must have been somebody buying silver there. Up, it's coming on again now, so keep an eye on it. But we're looking lower in gold, as we said before. We've made a couple of these price objectives that we've been looking on. Just one second, folks. I have to turn this off, otherwise it is going to disturb us for the rest of the day. Well, it won't disturb you, but it disturbs me because I hear this beeping in the background, and it'll be gone in 1, 2, 3 seconds. So we're done now with that. Anyway, we will take a look at the gold like we did yesterday. It does look like we're getting ready to go a little bit lower. Let's start out with our DAX like we usually do, boys and girls, because I don't want to get the routine out of whack a little bit. Anyway, you'll notice that the DAX has still been moving down. It's bounced around a little bit. We're having the same thing happening in the FTSE, but it has really accelerated to the downside without very much of a bounce. So that big ABCD pattern that we saw on the daily would certainly be something to watch. We should get a bounce in here because we're down from 7,800. We've dropped 10% in the market for for the UK market also. So keep in mind. Yesterday, folks, I made a really bad goof off. I should have made the importance. It was the day was 2618, which is very important on the date of the year. But more important than that, it was Ronald Reagan's birthday. He was one of the 3 presidents that I've been able to meet in my lifetime. Lincoln was first, Grant was second, and then, of course, Reagan was third. I met him when he was the governor of California. We were at a fundraiser when he was a governor, and I had just started at Drexel Burnham Lambert, and it was a lot of fun. Anyway, let's move on to look at some of these charts that we need to look at this morning. A lot of things are happening. Yesterday, we were talking about the S&P having a potential for a rally up into that 2690 level. We hit 26, I believe 96 last night. We completed that, and since that time, we've been able to back off just marginally, which is really a good sign. We're holding that level extremely well. So that's a situation where we're probably, I'm trying to find the chart, we should hold the level. In fact, 50 points lower in the S&P would be actually a 135 pattern and be, relatively bullish. Now, the volatility that we're having now is, it started to pick up. It's certainly not unprecedented because we've seen greater volatility than this. But we had a 10,000 point move in the Dow in 2 days, folks, up and down. I mean, we were having 800 and 500 and 1,200 point rallies. When you add them all up, it's almost 10,000 points over, a few days. Now, that can be a very, very strong support, but also if it fails, then you're looking at something that, could be, a whole lot more sinister. That we'll have to wait and see if it unfolds. But right now, we're in this sort of tight, well, it's not tight anymore. It's 40 points in the S&P, but watch the 2845 level in the S&P down about 40 handles would be that would complete a higher lows. So that would be a 135 pattern, and that would be really interesting to see if in fact we're going to do this. Now remember, one of the things that we're watching very, very closely is that we had this big drop on Monday. We had the bounce on Tuesday. And if we go sideways here, Wednesday, Thursday with a slight upward bias and into Friday and then close lower on Friday, folks, that's about as bearish pattern as you can get. I mean, that I don't know if it's going to happen or not, but we'll still be here on Friday, hopefully, and we'll see if it's going to work out that way, because that would be a really interesting one, to look at the short side, because a big drop like that and what they call the dead cat bounce. I know that's not very good for the cats, but they don't mean anything against cats, boys and girls. Anyway, that's what we want to keep an eye on. And the other thing is, if it's really strong, if we come out of here today or tomorrow or even Friday and close really, really strong, there's a potential that we might even attempt a new high. I don't think that's going to happen, but we'll be able to look at it. Regarding that, there's a really interesting article in investing.com I noticed on Bloomberg this morning from Paul Tudor Jones. And Paul Tudor Jones is saying this is the mother of all bubbles, and something sinister is very, very bad is going to happen. Also, yesterday, Neil Cavuto had my good friend Peter Elides on, and Peter Elides from Stock Market Cycles basically said that he thought that we were ready for something very sinister, about a 3 to 4 year bear market. And Peter is one of the better technicians that I've been privileged to know. Hopefully I'll have him on, but he gets rather busy, and his son George helps him run the business. So we'll see if we can get him on. In fact, I'm going to call him this morning and see if we can get him to come on our show. He's really smart. Boy, he knows Fibonacci. He knows cycles. He has a most unusual chart, folks. It's a scroll. It looks like a Torah. Where it's scrolled up, and it's since 1955. He has hand charted the Dow Jones Industrial Average on parchment paper, and it must weigh 50 pounds. It's huge. I mean, it's something that it's got to be worth a lot of money because of the time that he put in it. But he's done all these charts by hand for many, many years, and he's still kept it up all these years. I mean, I've known Peter 50 years, so. I remember when I saw it in his apartment way back up in the Hollywood Hills. But when I first met him in 1966, he was 10 years into it then, and I thought it was pretty cool, and he's still doing it. So it must be something pretty good. One other thing, folks, this is a really good month for you folks if you want to try out the Tiger Den here. They're having a special. You get to try it for a month, I believe, free from our good friend Tom O'Brien. And it has got some great information in there. If you remember a week or so ago, in fact, it was just about a month ago, Mr. Z in the room was looking for a buy in the cocoa on that first retest to the bottom at 1845. Folks, we're now $2,000 higher. We're trading at, actually this morning, we're trading at 2085 in the cocoa, completing that ABCD pattern that you see here. So, these guys in the den here are some pretty smart dudes. And I mean, they're in there all day long, 24 hours a day. So if you want a little help and a little boost of what you're looking for, the Tiger Den is a good place to get some great information with some super nice people. And the contributors, of course, do a splendid job of what we're watching here. But the main thing is to take a look at it. You kick the tires for a month and see if you'll like it. But it's a good deal for you, and I think you'll enjoy it for quite a bit. Well, hats off to Mr. Z on that. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, when we start talking about Ronald Reagan, I wanted to go into the one of my favorite stories about Ronald Reagan is when I was traveling to China 3 times a year for the Merck. I got very, very lucky. One of the people that was doing this for the Merck didn't want to do it anymore, and so they asked me if I would like to try it, and I did it for a long time, almost 10 years, and I would go to all the universities in about 12, well, maybe more, maybe 20 different cities across China to talk to the graduate students about capital markets and how futures markets worked. My specialty was for futures, and so I explained to them what a contract was and how I bought and sold, and using Fibonacci and stuff like that. But on one of my trips to China, President Reagan passed away, and in Beijing they have Embassy Row there that is really spectacular. This is where all the mansions are, where all the U.S. embassies are, and if you ever want a great job for the government, there's no better job than being an ambassador. That is as close to a king as you're going to get. And anyway, on Embassy Row, the Chinese government asked everyone to lower their flags to half-mast, because if you remember back in the old ping pong days of 1972, when President Nixon, started to break the ice when China no longer became our enemy, more of an ally, and so we became very close with them, since all those years. It's getting closer and closer, but years ago it was not so much. Well, there was one country that would not lower the flag, and that was France. China didn't do anything at all except one thing. They turned off the water and they turned off the electricity. And 3 days later, the flag came down. So that's one way of handling diplomacy. So we'll see, how they handle these things at the Olympics coming on. Hopefully they're going to go on without a hitch. I'm pretty sure that they will, because security is going to be very tight. But maybe through sports we'll start to see some people talking. Maybe we'll put some of these nuclear weapons away. But I'm going to get off my soapbox right now, folks. Let's look at the gold market here, folks. We're getting very, very close. We want to put this chart up here because this is one that we focused on in the newsletter this past week. Oh, just a second here. I did something wrong. What did I do wrong? Here we go. There we go. You're right. There is no better job than being a U.S. ambassador. Once in a while, there's some problems, unless you're in some place like Lebanon. But anyway, it's really a great job. Take a look at this gold chart, folks. You'll notice that we made the high up there at the double top. We had a really nice 3-drive pattern. It was just as nice as you could be. And, folks, it took almost a month to complete that 3-drive pattern. It had a perfect ABCD. We took out the old high from August by $1, which, wasn't very powerful. Then we broke down, and the easy trade was when you rallied back over that 4-day period and hit a 61% retracement, and then we're only $8 away from this price objective we're looking at, which is down around 13.16, and so that's going to be really interesting because we're going to be looking at the 38% retracement. So this is going to be the spot to look at the gold. I don't know if it's going to hold or not because we have this divergence between the euro and the gold, where the euro is acting. It's not telling us that gold is breaking out. That's the bottom line. Just look at this, boys and girls. This will give you an idea that, if you're buying gold in terms of euros, you're not seeing it. You're not seeing this breakout. So let's just bring this up so you folks can take a look at it, and you'll see that that's what's really happening, because the whole world doesn't buy in dollars. We're only half the world. So all of Europe and Asia usually use euros. So those are one of the things that we want to look at, and we'll see. That also could be 1290. You're right, Maria. That could easily make that. But the difference between 1314 and 1290 is, that's a 2,400. Let's see. It's 14. It's $2,400. So you got, $24 an ounce. So you have to be, really careful in here. Now, the thing to watch in the gold is to watch to see if you get this really wide-ranging bar. Wide-ranging bar in gold would be around $15, would be my guess. So if you see a range of $15 to the downside coming into that number, you've got to be really careful, because don't try to catch a falling knife. It's not the amount of money that you can make, it's the amount of money that you don't lose. So don't stand in front of it if you see a big drop. That's the main thing, of what's happening. So we'll keep that in mind as we get into it. Now, this is we have a really big day getting off the track. Two things. I got these notes written down. Tomorrow we've got one of our very favorite special people that we get in once a month is Bill Meridian from Cycles Research of Vienna, Austria. Bill will be in tomorrow at the break to talk to us. So we certainly want to pay attention to him. And then on Monday, right before we have the solar eclipse and new moon, we're going to have Mr. Norm Winsky of Astro Trend, who's been pretty spot on some of these markets. So we want to listen to what Norm has to say. And he mentioned to me last night that it is the biggest cluster in the month of February comes in on the 15th. So we want to, really pay attention to it, especially if we see this gold coming down into that time. That would be an ideal situation, and that's the main thing that you got to watch. Is if these timing things come in at the same time, it really gives you a little bit more of a place to look at some of these things. Let's double check here to see what the markets are doing this morning before the opening. We're trading at 26.85 in the. I still believe we got a chance at 26.35. That's the number that I'm looking at. That would equal the last drops that we've had. You remember the Treasury bonds yesterday, folks? We were watching that very closely. That rallied almost $1,000 off of the Gartley, and whether it's going to continue or not, we'll be able to see. This is the one that we posted yesterday just to show you. And right now we got up to 146.09. and now we're back to below 146 again. So there's a 50-50 chance that this could fail. But long term, these bonds and notes are going lower because interest rates are going higher. That's the main thing. Solar eclipse is on, the solar eclipse, I believe, is on Tuesday, the 15th. That's the start of the Chinese New Year. Okay? This is, that's what we're looking at. We'll see if that's going to be the same thing. The 31st, it's 14 days in between that, so that's how you come up with that. So we'll see. Maria, don't look for a crash. I mean, you might get one, and if you do it, you almost have to do it with puts unless you're lucky enough to get in the futures right before it breaks. But watch it very closely. I don't think the crash is going to come. Well, I should shut up. I don't know, and no one else does either. And we'll be able to see if it can. Don't say there's no way we can't have one, because we can. Because fear is a greater emotion than greed, boys and girls. Trust me. You can see fear in people's eyes and the diaphoresis and sweating and the white knuckles and the parched lips and stuff like that. I know that because when I look at the picture of me trading in the pit, I can see it right there in my face. Anyway, we're going to take a little break here. Come back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, there seems to be some chatter here in the Tiger Den this morning about the potential for a crash. Folks, I've tried to look at all these markets on different types of crashes, whether silver, gold, which, natural gas, whatever it happens to be, and they have one characteristic in common. First of all, it has a good break, much like we had here in the stock market recently. Then it has this really shallow rally. And if the rally is only 382 and takes 3 to 5 days and then starts down hard, like could possibly be on Monday, that sets up a crash type scenario. But that's the only thing that I can see that you can look at. That's what my game plan here is, what we're talking here in the room. And I don't know if this is going to happen. I'm just trying to prepare because I don't understand the fundamentals of what's going on in the world, but I do understand the charts. And when we had this in 29, we had the same thing. The market topped on September the 3rd. It broke really hard for about, I think about 2 weeks, and had a little bit of a rally, 4 to 5 day rally, and then that was it. I mean, it just, basically come unglued. And that wasn't the real crash, folks. The real crash didn't start until April of 1930. The market broke, a great deal and, wiped a lot of people out. And then it rallied almost exactly 61% from the low in November of 1929. It rallied 4 months into April of 1930, right at nearly a perfect 61. It was around 59.8%. And then it went and dropped 90%. And we got down to 30, I think, I forget this. I used to remember it, but I knew I was wrong. The bottom, I believe, was July the 5th or the 8th of 1932, and the Dow was at 42, I believe. And the high had been 383, and that was on September 3rd, 1929. So it took the market, I believe, 37 years to take out that high. That, as I recall. Yeah, thank you very much, Basil. You're right. That's July 8th. And the low was at 40.60, Basil is telling us, and I trust his work because I've seen this before. I used to think it was July the 5th, but it was July the 8th. Of 1932, and then from there it went up. Remember, folks, in the Dow Jones, we had the Dow Jones had been about 35 years old at that time, and 16 of the 30 Dow stocks went bankrupt. During that time period of the Great Depression, American Telephone, I believe, went bankrupt twice. And the only original stock left in the Dow Jones is the one that looks the worst, and that's General Electric. It's the new robber barons are these guys like Jeff Bezos and Apple, and also Facebook, and some of these others. I mean, these are the new robber barons. I mean, they've made, on a percentage basis, they've made more money than, well, some of the robber barons, but you can't really know for sure because the value of the money back then was different than it is now. But, you had Andrew Carnegie, J.P. Morgan, John Rockefeller. I mean, you had a lot of Cornelius Vanderbilt. I mean, these guys made, massive fortunes. How you would equate them in today's dollars, you don't know. But this was the railroads, the petroleum industry, the finance industry, electricity. All of that was happening, during this Great Depression that we had. And, this was the time when we had the telephone, indoor toilets, our refrigerators. I can remember the refrigerator when I was a little boy. The iceman used to come in and put the ice on top of the refrigerator. We didn't have an electric refrigerator. So this goes back a long time. You young folks don't realize, well, here we go walking through the snow to get to school. Let's forget about that. Anyway, tomorrow's a big day, folks. In Philadelphia, there on Broad Street at the offices of Duke & Duke, there's going to be one large parade as the Philadelphia Eagles will be celebrating the Super Bowl championship. So the offices of Duke & Duke will be closed tomorrow. We'll reopen again on Friday. We'll do our show from our auxiliary office up in Saratoga, New York tomorrow. And hopefully we're going to have our good friend Bill Meridian as our guest, and we'll be able to look at it. But if you get a chance, take a look at the parade. You'll see my two grandsons in there. They'll be the two cute little boys, age 4 and 6, with their Eagle shirts on and their Eagle hats. They sleep in the Eagle shirts. They wear the Eagle shirts to school, as all their other classmates do. So Philadelphia is a city of brotherly love, but boy, is it a city of sports. Shut the front door and raise the rent. Someone's asked a question about the gold and about how confident I am on whether this low is going to hold that we're looking at potentially at 13.16. Boys and girls, I don't know for sure, but the one thing that I do like is I do like the way that it's getting down here. We happen to be short the gold for the service. We sold it at the 13.50 level on that rally back, and so we're looking to cover it down here around this 13.16 level, but I'd like to see it come down really quietly. That would really be an ideal situation. If we can get that down to, might not be exactly 13.16, but we're getting pretty close, so we want to watch it to see, you know, how this is going to go through. So we'll watch it as we look around. Let's see how the market is reacting this morning. We're getting ready to take out those old highs from yesterday at the 26.99. That sets up the 78% level at around the 27.15. I believe that'll be some resistance in this. We got down to 13.23 in the gold, and we've been able to bounce just a tad, not much. 23.60. Well, we rallied $5 really quick, but I still think we got a chance at that 13.16. So let's just wait and see if that's going to hold up. The Treasury bonds have still held up above that 114.16 level. We're trading at 145.26. Folks, the sale of the century is if you'll do the work yourself. I can't give you all of these because it's you just have to do it yourself. Otherwise, you got to believe in it in order to see it. But the main thing is if you want to look at it, take a look at the bonds at 148.12, folks. That is such a powerful sell signal. You remember the ABCD that we had in the S&P? This is the one in the bonds. It's going to be a 3-day correction. Right at a 382 with a ABCD, and would be up 3.5 handles from the bottom. Boy, that would really be a good place to watch it. It's very, very similar to the one that we had in that 154 level a few weeks ago when Mr. Z was touting it that this was a really strong level for resistance. So keep an eye on this 148.10 level in these bonds, because that's going to be a really nice pattern up there. 382, ABCD, 1.27, all the things that we like to see. So that's one that looks really interesting. What I'll do here is I will, when we come back from the break, I'm going to pull this up on the bonds and post it into the room so you'll be able to see it, and you can decide whether this is what you want to be doing, and we'll watch it very, very closely. Hold on one second. We'll be right back. It's no break yet. So hold on. Let me, I'm trying to get this chart fixed. We'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. I want to make a couple corrections. That number in the S&P comes in, the 61% retracement comes in at the 2735 level. 2705 is the 50% retracement. Now, on a human interest story, folks, I've been doing this mentoring for people for, oh my gosh, since 1985. And occasionally you get a really interesting human interest story. And I had one yesterday. I had a phone call and an email from someone I met over in the UK a couple of years ago. He had been a big banker in the UK banking system and retired early. And unfortunately, he got cancer. And the doctor had given him about 4 to 5 months to live at the very most. He said it was metastasized all over his body. Robert didn't like traditional medicine, so he went to Japan and worked on diet and enzymes and, I guess, probiotics, something like that. And over a period of a year, he has been able to completely be cured of cancer. They have no cancer cells in his body at all. The doctors in the UK cannot believe it. And before this happened, they said he would never be able to have children because of all the chemotherapy they tried on him. And a few weeks ago, his wife gave birth to a beautiful little boy. And it was really, it was really exciting to hear this. And then he told me something that just literally, knocked me off my chair, and that is that he paid for all of this medical stuff in his travel by trading the euro. And I said, Robert, if you can make money being in sickness and all that pressure like that, once you're healthy, fully healthy, well, I guess he's fully healthy now, but I mean, I thought it was tremendous. And he said he thought he was a little disappointed. And I said, how could you be disappointed? You're under the greatest pressure you could possibly do. You're fighting for your life, and yet you still made money. And he said, well, it was easy. He said, I just looked at ABCD patterns in the euro, and when I saw one, I bought it, and I lost sometimes, but I made more than I lost, and isn't that what you're supposed to do? And I said, yes. And so anyway, it made me feel pretty good to see that he had done so well, and glad to see that he had done. I want to bring up this chart here that I want to show you here in the, first we're going to do two charts here. First of all is the 60-minute here in the Treasury bonds. I'm going to show you that level that we're looking at up there. That's a 382 up there at that 148.15. That's a big ABCD pattern that comes in, but the bonds and notes are so bearish, I'm not sure they're going to hit it. But if we do something a little differently, with this chart, and that is move to a 4-hour chart, which is, basically looking at, a couple of months. You can see that from the high we made way back here, in January, that would be almost a 50%, be a perfect 50% retracement of that move. Now, the key here, and this is where I want to pay, if you can pay a little bit of attention now, look at this chart really closely. If you look on the left there, on the 17th of January, you see that 1.618 level right there? Notice what happened once the market started to break down below that 1.618 level. In other words, when the ABCD legs extends by 1.618, there is one of your first tip-offs that there might be a CRASH coming. So watch that number when you're doing your charts, because if you go below that level, you're going to be looking at something really sinister if you break through. The same thing on the upside. That's what it was doing when the Dow went straight up during January. So anyway, we'll look at that as we go through here. No guarantees, but it's just a way of looking at some of these things, and we'll be seeing what's going on. Okay, let's move on here, and we will get to the next chart that I wanted to talk about. And all I have to do now is find it. Oh, shut the front door. And oh, it's Bitcoin. That's what I wanted to talk about. Remember, we were looking at this Bitcoin down around this 7,000 level. We broke below it, and now we've rallied. We rallied 2,500 bucks, and that's per share, of course. We got up to the 8,000 level. Let's just put up the chart here. I still believe that we've got a chance here to make this 5,000 level, because those are those old highs that was way back in September before we had this big move here. But there is a possibility if we get below 5,000, then the Bitcoin's probably going to go down to 1,000, maybe even more. I don't know, but right now it's still looking good. The other cryptocurrencies that John Jameson from the Jameson Letter looks at are Ethereum and Nemo and couple others that Cordero, which is ADA, all of those have completed ABCD patterns and still look quite bullish. So there's still a hope for these things, but seasonally, Bitcoin has a strong seasonal to come down into January and February. Those of you that attended John Jameson's webinar on the blockchain and cryptocurrency, he highlighted that it's only got, a 7-year history, but, in all those years, January, February have been bad years, and then they start up after that. Whether it's the folks taking a vacation, the miners taking a vacation or not, I don't know. Here's the chart of the E-mini S&P, folks. We'll just putting in here, get this up here. You can see that 27.39, 27.40 level is a 61% retracement. The 50% comes in here at the 27.05. So far this morning, it's held that. We got as high as we got to 27.05 exactly, and we're down about 10 points from that level. So watch this. The key here is to see if we get this rally that's going on right now that started on Tuesday. We'd like to see a nice 3-day rally. So we got the 6th, 7th, 8th, and 9th. So coming in here to Friday, if we are anywhere near this range and then close poorly on Friday, there's where you want to be ready, because that's characteristic of how these big downdrafts can happen. It might not necessarily be a crash, but we dropped 3,000 points in the Dow in a matter of 6 days. So if we multiply that times 1.618, we could easily drop 5,000. So you multiply 1.618 by 3, and that's 135 Fibonacci, 5.8. So that would be a 5,000 move down in the Dow, and that would be our next leg down. And that would take us down to right near some of those gaps that we have, down in that area. We got we still have 9 gaps to fill in the Dow Jones Industrial Average. So this is what we're looking for. I don't know if it's going to happen or not, but we're trying to see if we can plan for it. Whether it's going to happen or not, only God knows, and she doesn't trade anymore. So we'll follow it again. And tomorrow we will have, as I mentioned, Bill Meridian as our guest, and that'll be a lot of fun with some great information. He certainly added a lot to us here at TFNN, which we've really enjoyed having him on here. As far as the currency, folks, you know, the euro has really strong support at that 123 level. If we break below that, we're looking at something that will most probably get back to that 119 level, which was that secondary breakout that we had in the euro. So we came very, very close in the euro to that long-term 1.618 number going back about 4 years. Whether that was close enough or not, I don't know, but it was within about 60 pips. So we'll see. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to talk a little bit about the euro here. We're talking about that important level of 123. We're very close to that right now. We're at 123.41. We break through that, that's going to be interesting. But the key here over the next 24 hours till we're back on the air is to look at watch the gold here at around this 13.16 level if we get here tomorrow. And that's going to be a very, very important one to pay really close attention to. And then also, if we can't go screaming through 27.35, 27.40 in the S&P, which is quite easy because we're swinging 1,000 points in the Dow without too much trouble. So watch that, because we could be setting up for a really nice move to the downside. I'm saying a big break that we had on last week and then continued into Monday. We have a Tuesday, Wednesday, Thursday rally, nice 3-day rally, and then Friday rollover day where you look to be weak, and then end the week, on a weak note. That sets up for a really bad week next week in stocks. And believe me, we've been going up forever. So it's going to just be another big ABCD pattern taking us down, like I mentioned, another 3,000 points in the Dow. And if you can make 3,000, if you can make 1,500 points in one day, you can certainly make 3,000 points within 2 days. So we're seeing increased volatility. I think volatility is here to stay. We're going to see some really big things in volatility. I believe we're going to take out those highs from 2008. The volatility index will get above 90. They beat it up pretty badly. We got up to 50. Then we made a, backed off to 28. So I still think that we're looking at a much higher price in the volatility index here over the next, for a fact, all of the rest of the year, maybe all into the next year. So it's going to be something different to watch because people have been, selling volatility. That's not what you want now. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!